Joining me now, Ed Yardeni. He is the president of Yardeni Research. Welcome back. It's good to see you.
Thank you, Scott.
You've been talking about the idea of a potential melt-up. Did the Fed just initiate that?
I think they did. I don't think that 50 basis points was really necessary for the point of view of the economy. The economy is growing about 3% on a year-over-year basis. Now it could grow at a faster pace as a result. But I think the result is going to be productivity gains that are more than we've had of late. And if that's the case, it'll show up in earnings. So from an earnings standpoint, I think we're okay. It's not irrational exuberance. But the valuation multiple stretched. It's up around 21 right now on a forward PE basis for the S&P 500. The Buffett ratio is 2.8, which is near record highs. So I would have preferred to see the market kind of go sideways for a while, but the market never listens to me, and it just keeps going up.
I mean, how much do you think it can go up now?
Well, you know, the way I forecast is I have a base case and then one or two alternative scenarios. And in my base case, which is that the market follows earnings and valuations don't get too much stretched from here, I would have the market going to 5,800. We're almost there. I mean, we could be there by next week sometime. But I think in a melt-up scenario, which I just raised the odds from 20% to 30%, sort of a 1990s deja vu all over again scenario, I think we could see over 6,000. And then maybe that'll set us up for a correction early next year. I don't think it'll be a bear market because I don't think we're going to have a recession.
Does it change in any way what can go up? The kinds of stocks that maybe I need to think about 50 rather than if it were 25?
Yeah, I think the market's already kind of thought that through, and it's kind of given us a pretty strong indication of what this inflection point, this change in Fed policy means for the market. What it means is broadening. We've been thinking it would be broadening there for quite some time, and it just kept focusing on the Magnificent Seven. But I think we have seen in the past few months that the market has broadened out to the small cap and mid cap. So their valuation multiples are starting to improve. Look, I think that the trade here is to really broaden out the S&P 500. In other words, focus on the S&P 493. I still have a problem with mid caps earnings. They're just kind of still in a coma. They're flat. And I haven't really seen things pick up. Maybe with lower interest rates, that'll provide some lift, but I see more opportunities in the 493.
We'll leave it there. Good weekend. We'll see you soon.
Thank
Ed
you.
Yardeni, thanks so much.